So I appreciate everybody getting on. If you're watching on a recording, we welcome you here today. Um, I'm Scotty Sykes. We have Sarah Phillips on with me as well. We are with Sykes and Company. Sykes and Company is an accounting and tax firm, an advisory firm specializing in pharmacy, community pharmacy all over the country. Um, we work with a lot of pioneer pharmacies or pharmacies that have the pioneer system. So we're very familiar with this system. In fact, it's one of the more popular systems we work with for good reason, as you all know. But we have good experience here. So I'm gonna be going through pretty much real quickly, something I would do in a 2-hour presentation. We're going to buckle it down to 1 hour or so, but we're going to go over, accounting, why accounting is important in your pharmacy, what the individual pieces of a pharmacy accounting system looks like. We're going to go quickly over a balance sheet and P&L. We're going to touch on a few of those hot topics there that you need to be paying attention to. We're going to go over some KPIs, and we're going to end on some uh, tax things here as we get towards the end of the year, something you may be able to consider here before the end of the year. Um, in between all this, we're going to be mixing in some pioneer reports and kind of going over that as it relates to each portion we're discussing. Um, and so with that, I'll go ahead and get the ball rolling here. And meanwhile, if you have any questions, please feel free to put them in the chat box, and I will answer those as best I can. And let's go ahead and get started, Sarah. All right.
On your roll.
So our learning objectives today, we're going to talk about why accounting is important for your pharmacy. We're going to go to our best practice back office pharmacy accounting workflow. What does that back office pharmacy accounting workflow look like? What is the best practice there? How does Pioneer? What is Pioneer reporting? What can that do to help you in that best practice? So we're going to be touching on that as well. Again, we're going to be going over key points of the balance sheet, profit and loss, and of course the Pioneer report. So first and foremost, I bring this up on pretty much every presentation we do because it's so important for pharmacies to have a fundamental accounting system. Because with pharmacy, the inherent nature of pharmacy with tight margins, you have to understand what's going on in your pharmacy each and every day, every month, all the time. You got to know what's going on in your pharmacy because many pharmacies we see lack this basic fundamental, that lack these basic fundamentals. Either the balance sheet doesn't have any integrity, there's missing accounts, there's stuff all over the place. If you pull a report from QuickBooks or whatever system you're using, it doesn't have a lot. It actually has no value because the numbers and the integrity is not there. So once you have the fundamentals in place, it gives the pharmacy owner complete power over what they're doing in their pharmacy. They can analyze, they can use those numbers to plan, better manage their pharmacy. It can really just take you to a whole nother level. But we always start with this because so many pharmacies just lack these basic fundamentals. And if you are one of those pharmacies, you're gonna something maybe in your gut's not right with your pharmacy. Always go back to the fundamental accounting, get some good numbers, understand what it's telling you, and you can learn so much about your pharmacy from the numbers. If your margin's under 22%, why? You can just start asking questions and figuring this stuff out. So it's very important. And plus the inherent nature of pharmacy, again, is going to require this because of those tight margins, cash flow, DIR fee issues. And meanwhile, you're filling a script, you're adjudicating a script, you're not getting paid for 20 days, 21 days from third parties, yet your wholesaler bill is due in about 10 or 15 days. So you can see the inherent cash flow problem in pharmacy as well, which leads to some of the things we're going to be touching on. But the nature of pharmacy today requires some sound fundamentals, and we're going to be going over a lot of that today. Again, it's going to enhance your management functions, internal controls. You got to have those internal controls there because just about every pharmacy, there's going to be somebody in there maybe trying to slip some things out, whether it's cash or some inventory. So internal controls are very important in pharmacy. Um, those fundamentals are going to allow you to be proactive. If you got good solid numbers month in, month out, you can then plan, be proactive with your tax planning, tax mitigation, and not to mention you can identify some trends, which is important to see where you stand among your peers. Again, integrity, structure, and control is a key feature here. One of my favorite things is it's going to allow the owner here to focus on pharmacy growth and patient care. This is definitely one of my favorite ones here because, if you're sitting here worrying about the back office, concerned about, what's going on back there? I don't know if my numbers are right. I don't know if my CPA is doing something right. I don't know if he's asking the right things or I should be giving the right reports, et cetera, et cetera. That doesn't need to occur. You need to have all that buttoned down, and then you're going to just get solid numbers every single month, and you're going to be able to focus on your pharmacy, the growth of your pharmacy, and taking care of your patients. That's the ultimate goal here with a fundamental accounting system. Now, it is going to help you with cash flow because you're going to be identifying areas where you have weaknesses, where your strengths are. And if there's weaknesses, why do you have a weakness there? What can you do to improve it? What resources are there to help me improve that? You can improve cash flow with good solid numbers because you're able to identify the areas of cash flow problems. And maybe you can go in and fix what's causing that cash flow issue. And a lot of times you can. There's a lot of things pharmacies can do to run efficient, effective, profitable pharmacies. We work with a lot of pharmacies that are very, very profitable in this environment we're living in today. So it can be done. There's pharmacies out there doing it. Again, we see a lot of pharmacies that are just lacking in these fundamentals. So that's why it's so important we touch on this every time. So a pharmacy accounting system is really a cloud-based system. It's online. You're using video. It's daily real-time reporting. You're outsourcing payroll. Accounts payable is automated. And you're taking a proactive approach. Sarah, why don't you touch on why payroll outsourcing that's so important? We see a lot of pharmacies that maybe do it in-house versus outsourcing. What do you notice when you're working with pharmacies there?
Payroll can be very complicated, and there are just a myriad of different regulations and rules and laws in different states. And if you work with a payroll company that specializes in that, they're well versed in the different taxes for different cities, counties, states. Less for you to worry about there. And also where it's automated and going into these cloud-based systems, you can have those entries automatically post, and that takes away a lot of the risk of error from manual entry, which I have definitely seen. Also, we do annually payroll add backs, and we can answer questions about those if you have them. But that's another thing that those payroll specialists can help answer questions about and make sure that they're posted correctly, taxed correctly, and takes a lot of time off, gives you a lot of time back to focus on those pharmacy processes that Scotty mentioned.
It certainly does, because really all you are doing as an owner in a payroll outsource situation is you're approving hours. And the hours can, there's a lot of ways to capture time in those cases. These providers have fingerprints or time clocks, whatever it is, whatever fits your need there. And really all you're doing is approving time. Now, if there are, IRS notices are very common in payroll situations. They just are. If you're doing it in-house, I'm sure you've seen those IRS notices, minor as they may be in some cases. You still have to deal with it. If you're outsourcing payroll, typically their notices are literally cut in half. But if there is a notice, you send it out to your outsourcer and they handle it, and you don't have to do anything. So outsourcing payroll is great. And what about accounts payable, Sarah?
Accounts payable cuts your time for entering and paying your bills dramatically because you basically, like Scotty said, you're just approving hours for payroll. With outsourcing your accounts payable or automating it, you're basically just approving a check to be paid, not having to worry about actually writing a check, keeping checks and envelopes on hand, signing them, anything like that. It can be scanned in pretty much one glance in a number of minutes every day to approve and schedule those payments to go out.
Yeah, we have some pharmacies that pay their bills drinking their coffee in the morning with a click of a button, um, and that takes them 5-10 minutes. And there's controls that go along with that. So you could have someone enter get the bill into the system, but they can't pay it. Instead, you have to approve and pay or whatever it may be. So you can add some controls into that process, which is very important. Um, Moving along here, another key area, and I've got a couple slides on perpetual inventory and inventory systems. Inventory is definitely a hot topic in pharmacy today, but you got to have a sound inventory system. Hopefully, it's a perpetual inventory system. I know um, Pioneer has a great perpetual inventory system built into to what they do. So hopefully you're utilizing that to its maximum ability, and you're getting that into the accounting system. Because when you have perpetual inventory numbers and you get that into the accounting system each month, you're able to really see what's going on the books and records as far as margins and cost of goods and that kind of thing. So very key area. Again, we're going to be diving a little more into that, as well as third-party reconciliations. I'm going to be diving more into that here in a few slides, but third-party reconciliation is a key balance sheet item. You have to know what's owed to you at any one point in time. You can't just adjudicate script and hope. You got to adjudicate and manage using technology. Pioneer also has a report here that can assist here. But third-party reconciliation is very important today. I've got several instances where pharmacies have recouped thousands of dollars from using a third-party reconciliation service. Of course, timely financial statements. If all these items we're talking about are real time and you're getting it into the system real time, you're going to get timely financial information that you're going to be able to utilize to make decisions, on a timely basis on what your pharmacy is doing. So, very important. Also, very important to see how you're doing as each month progresses. Tax planning opportunities. Also, if you got good, solid data information, you can do some tax planning. Right now we're heavy in tax planning and tax mitigation processes right now at our firm, and we're able to do that because we've got good numbers through September, October, and then we just estimate the November, December, present some projections to the client, and they can take control over their tax situation. They know what April 15th is going to look like. And whether it's refund or they owe some tax due, but they can plan for that. They can work around that. They're not getting that call on April 10th or April 14th saying, oh, by the way, I need a $100,000 check by tomorrow. So it doesn't work like that anymore. Today's environment. And lastly, just accounting is an asset. Pharmacy in the past, margins weren't quite as tight. You could really run a pharmacy out of a checkbook or out of a bank account. You can't do that anymore because there's so many moving parts with inventory, third-party receivables, margin, DIR fees. You really need to use accounting as an asset because it can be a great asset if you know what you're doing and you've got the right team in place. So moving along here, you've got some daily processes in the accounting system. And, this is where it all begins. So you've got daily point of sale reports that are going to be updated into the accounting file on a daily basis. Hopefully you do that on a daily basis. Somebody's getting that information in there. You're reconciling the bank daily. to what's coming through on the bank account, to what the daily reports are saying, point of sale reports are saying happened at the registers. You're depositing cash on a daily basis. We see a lot of instances where there's pilferage of cash because it's not being done daily, it's done weekly. Understand that some banks are not literally across the street like other pharmacies may have, or your bank may be 10 minutes across town, but getting some kind of control and procedure and process in place to handle that cash is going to be very important. And of course, daily deposits is what's recommended there. Um, you'll be able to tie in what's going in the bank account cash wise to what is shown on the on the point of sale report, and you're doing those bank reconciliations daily, so you can see any discrepancies there. Also with bank reconciliations, we've had instances where $40,000 was just drafted out of the account, and because a daily bank reconciliation was being done, you could catch it, ask the questions, and come to find out that was fraud. And so they were immediately able, client was immediately able to say, $40,000 was drafted out of my account. This is a fraudulent transaction, and so they were able to take proactive steps to get that fixed. Whereas if you waited a month or two to handle that, you may be out of luck. Again, internal controls is key here. And also is key is we're capturing the revenue. We're capturing what's coming out of the point of sale system. And we're getting it in the accounting system. So it's very important. Cash, what's charged, those kinds of things, what coupons or whatever it may be, sales tax. Again, this is real-time accounting because you're getting it in there in real time, which is going to help you, at the end of the month when you're trying to get some financial statements to pull some information together. So real time is important here. Again, out-of-state sales tax is a key one here. It's going to give you the sales tax when you're doing this, but sales tax is a whole nother issue in and of itself. If you're shipping out of state, et cetera. Sarah, why don't you kind of talk about that sales tax, what we're seeing with pharmacies there?
Was it last year, the Wayfair ruling?
Fair, yeah.
Kind of not necessarily did away, but made it so that having a physical presence in states isn't necessary to be required to pay taxes in those states. So many states have different thresholds, and it's generally either and or a certain dollar amount and or a certain number of separate single transactions. Pioneer is able, I've seen several Pioneer reports, to work with you in order to keep track of the dollar amounts of sales and number of transactions to each state. And that's been very helpful for us for reporting requirements without you having to actually sit down and track it in a spreadsheet. So having that accurately in your system saves you time there too and tries to help ensure compliance.
Yes, certainly. So if you're doing any shipping out of state, whether it's drugs, OTC, whatever it may be, Pioneer has the reporting capabilities to let you know what's being shipped where and help you comply with those various state thresholds. Because, again, as Sarah said, a lot of states have different thresholds on when you're required to file a sales tax return and pay sales tax if it's applicable. So that's very important. You don't need to you need to take that seriously because this is an area where states are really cracking down on this sales tax issue because it's such an easy revenue generator for states, along with the Wayfair Supreme Court ruling last year expanding this area dramatically. So pay attention if you're doing any out of state sales or anything like that, and understand what your requirements are and how Pioneer can help you there. Again, if you're just joining us, feel free to drop some questions in the Q&A. Happy to cover any questions you may have. So, Sarah, why don't you go over this? This is an example of a daily sales report. What is this? Where would a pharmacy go from here?
You would either have yourself as a pharmacist or owner or a tech print these off basically at the end of every day. And you can see at the top on the left side, your different sales departments are shown. And some pharmacies have as little as you see here. Some pharmacies have 30 departments that they want to track. You would enter these daily, preferably, into your cloud-based accounting system. And you see you've got your sales. This tracks your sales tax on the tax collected line. And then over on the right side, you've got all your payments. So that's where Scotty was talking about keeping a handle on your cash, making sure it's being deposited, and your credit cards. There have been instances where people have changed their credit card processors and weren't receiving their deposits for weeks. So by entering these and tying them into what you actually receive in the bank and what you deposit, you're able to see if there's any cash that's missing on certain days, or um, remind you if you forgot to make a deposit. This is definitely helpful at the end of the month with that sales tax. If you look at the bottom left side, there's a taxable breakdown. This is a good measure to make sure that your taxable sales are accurately reported, because you can run this report for the full month and see your taxable sales and the sales tax that you collected. And if you do this daily, it helps to directly tie in those deposits, credit cards, and then at the end of the month, a lot of your information is already there.
Yep. This is a key point. This is key. You need to be doing this on a daily basis. Get this daily sales report from the point of sale system, get it into the accounting system, reconcile the bank account to this cash and to the credit cards. If you see credit cards not matching up, that's going to give you a timeout that you may be batching your credit card. The credit card processor may be batching the cards, say midday. You want to batch at the end of the day, um, maybe 8 o'clock at night, batch the credit cards for the day, and and hopefully, your credit card total here is going to match when you go in to reconcile the bank account the next day. Um, and so this is very important, because you're also going to see refunds. There's been areas where refunds have been taken advantage of from um, a theft point of view, where there's refunds taking place and the refunds are actually going into the pocket of the cashier. There's nobody to verify any refunds, say over $40 or whatever it may be. So again, internal controls is key here on what we're talking about. Capturing the revenue is key. The sales tax is key. You're picking up what's taxable, what's not, what sales tax you've collected. You can see that down here. And you're also, making sure that cash and those credit cards are getting into your bank account. And Sarah, isn't there another report that this is from the registers? But I believe there's another report, if I'm not mistaken, that does the same, shows the same information.
There is a system sales summary that just gives you a little bit more detail than this one does. The main thing I notice is that it shows all of your RX sales, not just the copay sales that you receive payment for at the registers. We have some clients that have other franchise requirements, and they have to report the total amount of RX sales. And this report may not give that to you, but the system sales summary that I think Scotty has on the next slide will show you that.
The system sales summary.
You can also see the sales tax collected, your sales departments on here. So I would say it's a matter of your preference and your needs, which of these reports makes more sense to use on a daily basis.
Yep. We got a couple questions. Is there an automatic export to QuickBooks? There is not, although we have talked to Pioneer about getting that set up. But it's still a work in process to do that. So there is no linkage with QuickBooks at this time. I wish there was.
We've talked to another third-party app about trying to make that work. It's definitely something that we are ourselves looking into.
Our firm is working to get that automated, working with Pioneer on that. It's just trying to figure that out. It's, as you can imagine, it's quite a process. Yes, that is a single register report. Sarah, if you've got multiple registers, you're getting one report from all registers. Is that right? Or are you separate?
Generally, we will get a summary report that includes totals from all the registers. I have seen where some people either prefer or aren't able to print a summary, and in that case, we would enter each register all on one sales receipt in QuickBooks, though, so that your daily totals still match what you hopefully would be taking to the bank and seeing from the credit card processor. And you also, as this one is, can run both of these reports for a full month or a range of dates or a single day or a year, just whatever you need. So I would say the best practice would be to have this report encompass the same days you're making that deposit for.
Okay. All right. So we've talked about the account. We touched on the accounts payable here. Again, this should be an automated process. Um, it's convenient. You're not handwriting checks. You're not stuffing envelopes. You're not mailing anything. It's just literally you click a button and everything handles from there. It's transparent. You can have several people log in and see whatever they need to see. You're adding controls into who can pay and approve and edit. Um, and it's going to sync into your accounting system on a daily basis. And again, payroll, payroll is complex. We're a CPA firm and we outsource our own payroll, so that should tell you something there. It's just a complex, labor-intensive process that can be outsourced for a fraction of the cost in most cases. Again, cost-effective, syncs to real time. You get more controls. You're not dealing with the IRS. It's just a great tool there. So we're going to jump into the balance sheet. Now we've gone over the daily processes, kind of the day-to-day processes in a pharmacy, capturing the point of sale reports, getting the the payroll and the accounts payable processing down. And then you're going to get towards the end of the month and you're going to be wanting to pull a balance sheet and a profit and loss. And so the balance sheet is a snapshot in time. This is an extremely important component of the financial system. If you do not understand your balance sheet, you need to understand it. You need to understand every number on there, where it's coming from. Is there integrity in that number? Is the bank account reconciled? Are there old checks sitting in the bank account? If they're old checks that should be, taken out of the system, they're going to skew your balance. That's just one example. You got to have integrity in these numbers because so many of these numbers impact your profit and loss. So if your balance sheet's out of balance or out of whack, your profit and loss is going to be all skewed, and what you're looking at is not going to have any value to you. So you got to make sure the balance sheet is, has integrity, and you understand where these numbers are coming from. And a couple of the key areas of the balance sheet that are important is third-party receivables. You have to understand what's owed to you at any given time. You can't just fill in hope anymore. There is technology out there now where you can track what's owed to you. You can get reports on, 30 days owed to you, 60 days, 90 days, what's owed to you, what's outstanding. You can see payer trends. You can pick up DR fees from that reporting. From those systems to get into your accounting system. You can, I've seen instances where pharmacy wasn't getting paid for 60 days or so from a third-party payer. They did some more research and they switched how they were billing, and it went from 60 down to 20 days. That's an example of how these tracking this can be beneficial for your pharmacy. I've also seen where a pharmacy didn't track their third-party receivables at all. She thought something was not right going on. Again, she had a gut feeling something was right. She finally got a third-party system reconciliation going, and she found out that this was not a Pioneer customer, by the way, but her RX system wasn't there was a glitch in the system, and what she was billing was not even going out of was not being billed. So she was missing out on literally hundreds of thousands of dollars, and she didn't catch it until this third party system was in place. Again, that was not a Pioneer customer, by the way, but that's an example of why these things are important. Um, and again, your third party is going to tell you what's owed to the pharmacy when you're adjudicating a script. Once you adjudicate the script, it's not when you get paid, it's when you actually fill the script. And um, fill and hope is not a sound business strategy. Um, there's technology today where you can take control of this situation. Um, this is the biggest unreconciled bank account in pharmacy. Ask your neighbors, ask your pharmacy friends. I bet a lot of them don't really know what's owed to them at any given point in time. And that just tells you, it's the largest unreconciled bank account in pharmacy. So you gotta get it reconciled, just like everything on your balance sheet. It's very important. Um, and the key thing here, it's going to give you, it's necessary to get a good idea of your revenues and your margin in the pharmacy, and your margin's the number one key performance indicator in a pharmacy. If you're not getting accurate margins, you're not getting accurate. I'm sorry, if you're not getting accurate revenues, you're not getting accurate margins, and so you can't see how your pharmacy is really performing. This is very important key part of your P&L and of your revenues and what's going on in your pharmacy. So um, we just don't see a lot of pharmacies that take this very seriously. So this has been a hot topic for some time now, um, which leads me into we'll have another slide here. Again, technology is your best friend here with third party. I mentioned the DR fees and trends. You're going to be able to pull that data and get it into the accounting system, catch errors. And the typical third party AR outstanding is about 19 to 22 days we see. Let's see, this is a report from Pioneer on third-party reconciliation. In the you can see the age trial. It's going to tell you what's 30, 60, 90, 120 plus days here, and give you your total balance. So in this case, this is what you're aiming for here to get this into your accounting system. Make sure it's, first of all, you want to make sure it's accurate. We've seen pharmacies that say, yeah, I've got third-party reconciliation, and you pull up a report like this, and you might have 100,000 here, 50,000 here, and 200,000 here. And in that case, this report has no integrity, it hasn't been managed, etc. So you got to make sure this report has been kept up to date, that somebody's going in and managing this report, these systems. You can't just put in a third-party receivable system in place and then not manage it. You got to manage the system. But your goal here is to get this total balance adjusted in your pharmacy accounting system each and every month. That's going to give you those accurate revenues we're shooting for. I know that this is the Pioneer report again. I'm not sure. There's other vendors that handle third party as well. I think Pioneer is limited to a certain degree on how far they go, but I'm going to defer to Pioneer on that. I just know from my past experience. But if you are using the Pioneer system, this is that report you're going to be looking at. All right, let's see. Another receivable report here is going to be your AR control balance. This is going to give you your, what is owed from customer charges, generally speaking, from the pharmacy. It's going to show you, again, what's aged here, 30 days, 60, 90 days, 120 days. It's going to give you your total balance, which you're going to hopefully adjust to. It's going to give you write-offs. It's going to give you finance charges that you're going to pick up for your accounting system. This is a month-end report, generally speaking, that we're going to be pulling. And here's the same thing. This is kind of like the third party receivable report, um, where it's broken down into the buckets 30, 60, 90, 120 days, um, giving you that um, that balanced summary at the end here. Okay, inventory. Aside from third party receivables, inventory is definitely the other biggest component here in pharmacy. And if your inventory is not correct on your balance sheet, your margin's going to be off and your net income's going to be off. We have seen cases where, and it's pretty common, unfortunately, where pharmacy will have $1 million on the books for inventory. We go in there and we actually take a look and see what's actually on the shelf. And in this case, it was 250,000. So the prior accountant CPA had overstated inventory by $750,000, which means he paid income on $750,000 that was just not there. And we've seen that. I've seen that happen many times. So maybe not to that degree. Could be 100,000 or so, but still, vital component of your accounting system. Not only because you don't want to pay tax on inventory that's not there, but it's going to give you that accurate margin. And the number one key performance indicator in pharmacy is gross margin. So if you're trying to figure out where your gross margin stands compared to your peers, if you don't have accurate inventory, you're not going to have, you're not going to know where it is you stand, or if you think you do, you're going to be, on apples and oranges comparison there. Inventory is $100 bills on the shelf here. So this in the grand scheme of things, this is really where pharmacies have a great bit of opportunity. Because in the past, pharmacies really, they had that a little bit of extra cash flow. They didn't have DR fees. They could keep a little extra on the shelf. In today's environment, this is an opportunity to keeping your shelves lean, because if you've got extra inventory on the shelf, you're paying for that inventory in 10 or 15 days, and if you're not selling it for 30 or 60 days later, plus you're waiting another about 20 days for the third party to reimburse you, you're carrying a lot of cost with extra inventory on the shelf. And what is that? That is cash flow. That'll drain your cash flow. So you have to take control of your inventory. And there's technologies out there today that'll link up with Pioneer that'll give you algorithms and trends on what you feel and how much you should have on hand based on prior year trends, and what's an ideal level for this and that. Technology is your best friend here. That technology is improving with inventory. And the reason why I say this is such a huge opportunity for pharmacies is because the average inventory turn in a pharmacy is 11 times a year. That's rock bottom. That's as low as it can go. It can't get any worse than that. As a pharmacy, you want to be at 18 to 22. That's where you want to be with turns. If you're at 18 to 22 turns a year, that's cash flow in the bank, not sitting on your shelf. You're going to see significant liquidity improvement there. And if you got to use technology, use it. But at the very least, you need to have perpetual inventory with Pioneer. You need to have processes and procedures in Pioneer, or in your pharmacy to do periodic cycle counts with that inventory, and get this information into your accounting system so you can track and track these turns, track how you're doing here compared to your peers, so you can monitor this. It's just again, we've done webinars on this topic just alone. Is such a big item. Inventory is. So we do have pharmacies that are doing heavy med sync. They get the wholesaler inventory in, and they're not even put on the shelf. It goes in the bottle and it's out the door. You can see how fast they're turning around that inventory and they're getting paid. They're shrinking that lag between getting paid and paying the bill. Whereas if you're just keeping excess inventory, you're not selling it for 30, 60 days later. You're just missing out on a big opportunity here. So you're going to see this really gain some more traction than it really already has, because again, 11 times a year is about as bad as it gets. Let me go back to the other slide, make sure I covered everything. Yeah, so again, pay attention to inventory. Get the inventory valuation report, get it correct, then put in some cycle counts, do whatever you can to pull some good information here so you can get in your financial statement. Sarah, do you want to mention anything about this report here?
The inventory reports have several different subtotals throughout the report, and these can be tens to 100 pages long. So really, in my experience, this last page is where you'll get the most important information, which is that grand total at the very bottom. Because as you can see here, there's some categories that will have a negative RX or a negative total. So you really just have to manage this as with any systems that you have to be able to have integrity in those numbers. And making sure that your inventory costs are entered correctly affects the inventory report, as well as the RX transaction summary that we'll be coming up on in a few slides. That affects what you think your gross profit should be, what you think your inventory should be, your cost of goods sold, your sales. Just again, any systems you have need to be managed.
That's right. So I'm glad you mentioned the costing. Making sure you're getting the right costing in the Pioneer system is important. If you're using other third-party vendors, Pioneer does let you lock in the costing. So, if your main wholesaler doesn't override, if you're doing cost downloads. So costing's very important here. Again, because you're using this in your accounting system, you're using this for analysis and to see how you're doing margin-wise in your pharmacy. Very important. Um, and great opportunities again here for pharmacies. Okay. Some key performance indicators that I want to mention here. And as I mentioned so far, margin is your number one KPI, and revenues affect margin. Cost of goods affect margin. Your revenues are going to be tied to your third-party receivables on your balance sheet, so making sure has integrity. Your cost of goods is tied to inventory. If inventory, accounts payable, what you buy from the wholesaler, what's in inventory, and then what's in cost of goods, those three components talk to each other. So if one of those is off, one of those accounts, or if inventory or accounts payable is off, your cost of goods is going to be off. So they all talk to each other. There's a linkage there. But the ultimate goal is to get to that margin, to get a good solid margin. The average is about the 22 to 23% range. NCPA Digest just came out, as a matter of fact, and it was 22%. We see 23% typically. But if you're in that 22 to 23% range, that's great. If you're higher, why are you higher? What are you doing different? That's always the questions I ask. What are you doing different there? Is it, diversified revenues, clinical infusion, whatever it may be. And if you're lower, if you are low, the red flag really comes up if you're lower than 22% margin and you don't know why you're lower than 22% margin. You really need to put your hand up and get some help, because margins are too tight in pharmacy to operate under 22%. And if you're under that, if you're in the teens, you really got a problem on your hands. You need to find out what's going on in your pharmacy quick. Because if you're say you're at 19% margin, you got 11% payroll, that only leaves 8%, 7 or 8% for your overhead. You're operating lean right there. That's going to hurt your cash flow. So this is really where these good numbers can take you. Starting to open the can of worms and look into what's going on in the pharmacy.
There's a question from Jeff, again over here about the margin before or after DIR fees. And what you were just mentioning is net of DIR fees.
No, actually, because so
That's
we're
what I was trying
booking
to
the
clarify.
DR.
Hmm.
Yeah, when we're booking. All right, this is a great question. So I've come across many pharmacies this summer during trade show season, and they say, "Well, my accountant says I don't need to put DR fees in my accounting system because it all nets to the same number, same net income," and that's exactly right. You will still have the same net income if you have DR fees in your system, in your accounting system, or if you do not. I 100% suggest you get DR fees in your accounting system. Even though the net number is the same, you still want to get it in there because A, when you book DR fee, it's an accounting adjusting entry. When you book it in there, you increase revenues because you're getting gross revenue because it's, and then you expense it out as an expense, the DR fee as an expense. So it goes up in revenues, but it's coming out as an expense because technically that's what's going on. You've billed for the full thing, gross revenues, but it's an expense when you before as the PBM pays you back. So um,
Another factor that goes into that, similar to how they have asked about DIR fees, is how you record your rebates
yeah,
if you're recording them.
yeah. So but still on DIRs, it's going to be your margin at 22 to 23% should be it should include DR fees in there. Your revenues should include DR fees, and then it comes out as an expense.
Another
If you
question.
don't, if you're not booking DR fees, your margin's going to be lower. And furthermore, you're not going to understand what your DR fees is as a percent of revenue. This is a key stat you need to be tracking in your pharmacy. If you're not booking this information, you're not getting this key stat. And this is where your DR fees as a percent of revenue is typical. What we're seeing in today's environment is 1.8% to 4% of revenue. If you're over on this side, why? If you're over here, why? Um, again, um, these are things you need to be asking, you need to be doing here in your accounting system. These can help you become more profitable, make changes, do whatever you need to do to figure out what's going on here. Um, Now, rebates, on the other hand, this margin would include rebate. The 22 to 23% would include rebates in that number. Um, whether you put rebates in your cost of goods, offset cost of goods with rebates, or you show it as other income, it would be included in that 22 to 23% number there. Current ratios also the current ratio is also very important. Um, that's where your balance sheet integrity is going to come into play again because you're going to be taking your current assets divided by your current liabilities, and you're going to get a ratio, and hopefully that ratio is greater than 2 to 1. Um, we see the NCPA average is like 4 to 1, but they have more. They have older, more mature pharmacies, so they don't have a lot of debt. We see 2.5 to 1 is about average, and if you're above 3 to 1, you're in great shape. If you're below 2 to 1, you clearly have a liquidity problem, cash flow issue in the pharmacy, um, and so we see it anywhere from 2 to 2.5 to 1 for the current ratio. But you got to make sure your current liabilities is accurate, that you're classifying your current debt and all that good stuff, and your current assets is accurate as well to get a good solid ratio there. That's the number one balance sheet ratio you're going to see in a pharmacy. Equity to assets is key. It's going to give you a good idea of the overall strength of the balance sheet along with the current ratio, but it's going to tell you how mature your pharmacy is, how much of your assets is actually fully paid for with equity rather than debt. Key ratio I look at for strength in a pharmacy. Why don't you talk about payroll percent of revenue, Sarah?
You want to keep your payroll, was it around NCPA norm 10 or so percent?
Mm-hmm.
Not including your officers or including your
Yeah, we
officers?
want to include officers in that payroll as a percent of revenue. Um,
There are some months, depending on how you do your payroll. Some people pay weekly, some people pay biweekly. Usually 2 or 3 months a year, you'll have 3 payrolls instead of 2. And if you're recording all your expenses timely and your revenues in the periods they should be, that helps you explain differences in your bottom line.
that's right. Certainly does. Um, the most high performing pharmacies are in the single digits as a percent of revenue for payroll. Again, that's going to be gross payroll. So if you're paying a pharmacist $120,000 salary, which is around average, that would be the $120,000 number in that gross payroll. So it's going to be gross payroll, including officers. Should be around that 10%. Uh,
Now, some LTC or specialty pharmacies will generally have higher payroll expenses, and that's normal.
correct.
And be alarmed if you're in one of those situations.
Yeah, good point. So the 10% is, community independent retails pharmacies. Certainly, if you're in compounding or long-term care, you're going to have different benchmarks there. Again, the most high-performing pharmacies are in the single digits here. I track total expenses as a percent of revenue. That's going to show you how you're doing with overhead in your pharmacy. I like anywhere from 6 to 7%, maybe 8% of total expenses. Total expenses would not include payroll because you're tracking that separate. It would not include depreciation and interest. You're doing that analysis. Those are a couple of the key performance indicators that we're tracking. On to the next report. This is one of the most important reports that I use for pharmacies. This is going to be the RX transaction summary. It's pretty much your audit log. And so much information can be gleaned from this. And as you compare it to your financial statements, this is a tool. From my point of view as an accountant, this is a tool I use because you're going to get your total scripts. You're going to be able to compare that to what's going on in the accounting system. Hopefully it's comparable. It's pretty close. It's never going to be the same because what you're adjudicating is not what you're getting back from the PBMs, but it should be fairly close. It's going to give you your costing. It's going to give you your margin here. Again, should be fairly close to what you're seeing on the books and records. It's going to give you brand, generic. I love doing those analysis and seeing, what percent is brand versus generic, how that impacts margins in a pharmacy, new refill, and how much new scripts versus total scripts. If it's below 50%, it's pharmacy's probably not growing much. If it's below 45%, the pharmacy's probably going downhill. If it's higher than 52%, you got a pharmacy that's growing pretty significantly. So a lot of data you can gather from this RX transition, the summary here on what's going on in the pharmacy and how it compares to what you're seeing on the books and records. You don't want to be reporting anything on your accounting system from this report. It's used as a supplemental analysis tool. All right. Looks like we're running towards the top of the hour here. So a couple of positive tax implications. So, now that we've gone through the quick points here on a effective pharmacy accounting system, and you're getting real-time data, you can do some tax planning, some proactive tax planning, and you're not being reactive. So you're actually right now doing tax planning. You're not waiting until the end of the year and saying, hey, what can we do? You're taking steps now to implement strategies and a plan. And those strategies could be, retirement plan enhancements. There's some older pharmacies out there with little debt, a lot of cash flow, where the pharmacy owner is, always planned that the pharmacy would be their retirement, which is not ideal, by the way. But in those cases, you can certainly implement some retirement plans to stash away significant amount of cash, decrease your tax liability, etc. So retirement plan enhancement, depreciation opportunities for new equipment, whatever it may be. Um, Cost segregation is a big deal. If you own the building you're operating in, a cost segregation study could be very significant. You can actually go back several years and implement this strategy here. But essentially, if you got a building, $500,000 building, you write that off over 39 years, which is forever. So not very a tax beneficial tool there. Whereas if you do a cost segregation, you take that building as a whole and you're breaking it down into components, and those components you can depreciate faster. In some cases, you can depreciate the whole thing, each component in year one. So very aggressive depreciation strategy here to mitigate income. Again, you can go back and implement a cost segregation study. It's just a very powerful tool um, um, available for those that own the building, pharmacy building. Accrual and cash accounting is huge right now. This is the biggest benefit from the Tax Cuts and Jobs Act of late 2017. Um, Essentially, accrual basis, you're reporting income when you adjudicate the script um, to the IRS, but under the cash basis, you don't report the income until you actually receive the income, receive the deposit from the third party, which is, like we said, 19 to 22 days. So you can see that there's a lag, there's a timing difference between an accrual and cash. And when you switch from an accrual-based system to a cash-based system, you typically have a large expense that you can write off against taxable income. So huge planning opportunity. Now, you certainly have to do your planning around this. You can't just say, I'm going to do this. You have to know what's going on before you jump into any accrual to cash change in accounting. Make sure you're working with your CPA there. And lastly, I do want to add that if you are a cash basis for tax purposes, that's not going to benefit you from a financial statement, financial analysis point of view. You have to be accrual basis because pharmacies are such accrual based entities with third party receivables, accounts payable, that kind of thing. You got to have those accrual numbers to get a good sense of what's going on each and every month in your pharmacy. Cash basis will limit you to that analysis. Lastly, just touch on the RX assessment service that we, Sykes and Company, provide. What this is we take a pharmacy's accounting books and records. We'll actually get access if you have QuickBooks online. We'll get, say, access to the QuickBooks online and your prior to your tax returns. And what we do is we take a deep dive into your books and records, overview your tax returns, get you on a video call, pull up on the screen everything, go over the balance sheet, the P&L, what we're seeing in your pharmacy, good, bad, and indifferent, any opportunities we see, and give you some and essentially give you a roadmap of the things we see you need to work on or implement, change, amend, whatever it may be. Kind of give you peace of mind of where you stand from an accounting and tax standpoint in your pharmacy. Again, all we do is work with pharmacies. I can promise you that you're going to walk away with some good value out of that. We do charge $1,495 for that. But again, you will walk away with some significant value. I pretty much promise you that. And you can go to our website there at sykes-cpa.com. At the very top, you'll see RX assessment of the homepage, and you'll just click that. It'll walk you through. There'll be a video, etc. On that. If you have any questions, certainly feel free to reach out to me at any time, or Sarah, and we're happy to help you, happy to answer any questions. We certainly appreciate the opportunity to be here with you today. Again, feel free to call or email if you have any questions, and we again appreciate the opportunity to be here. Sarah, thanks for joining me today. I know I called you in to help me with some Pioneer reporting, so we appreciate it, and hope everybody has a great day.